Okay, imagine this. What if the hottest company on the stock market, a company that grew so fast it became bigger than Starbucks in its own country, was built on a total lie? A lie so massive it would make $12 billion of investor money just vanish, literally overnight. Well, this is that story. So today, we're going to dive deep into the unbelievable roller coaster ride of Luckin Coffee. Seriously, it's a wild tale of insane ambition, crazy speed, and yeah, one of the most shocking corporate frauds you'll ever hear about. To really get this whole thing, you have to see how it started. We've got to go back to 2017. It all kicked off with a simple idea for the Chinese market that turned out to be totally revolutionary. See, the thing you have to understand is that Luckin wasn't just another coffee shop. Oh no, they sold themselves as a tech company that just so happened to sell coffee. And you gotta remember, this was the time of Uber and WeWork. Disruption was the magic word that got investors to open their wallets. Luckin promised to do for coffee what Uber did for taxis. And boy, did they move fast. In just 2 mind-bending years from when they started to the beginning of 2020, Luckin opened in incredible 4,500 stores across China. The speed was it was like nothing anyone in the retail world had ever seen before. And here's where it gets really nuts. That number, that averages out to more than 5 new stores opening every single day for 2 years straight. I mean, can you even imagine the logistics and the sheer amount of cash you'd need to pull that off? So what was their secret weapon? They called it the asset-light model. Basically, like 90% of their spots were these tiny little pickup stores. Think a small counter in an office building lobby. No comfy couches, no cashiers, nothing. You just order on the app, you grab your coffee, and you're out. It kept their costs super low and let them expand at that ridiculous pace. And this whole story of a tech-driven, low-cost coffee giant, it was like catnip for investors. And we're not talking about small-time players. We're talking about giants like BlackRock and Singapore's sovereign wealth fund jumping in. That gave Luckin this huge stamp of approval on the world stage. All right, so let's fast forward to early 2020. Luckin is no longer the new kid on the block. In the eyes of the market, they had become the dominant force in China, which was, the most promising coffee market in the world. And then, in January of 2020, they did the unthinkable. They officially had more stores than Starbucks in China. They became the largest coffee chain there. I mean, it took Starbucks 2 decades to build their empire. Luckin did it in 2 years. And of course, the stock market went absolutely wild for this. At its peak, Luckin Coffee was valued at a staggering $12.7 billion. For a company that was barely a toddler and had never actually made a profit, this was just out of this world. But here's a little detail, kind of a red flag that a lot of excited investors just seem to ignore. The company's own numbers showed that because of all their discounts, they were losing money on every single cup they sold. It cost them almost $2 to make and serve a coffee, but they were selling it for about $1.30. The plan was simple, just grow, 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 and we'll figure out how to make money later. So just when Luckin looked completely unstoppable, a stock market darling with endless potential, the first tiny crack appeared in their perfect story. And it didn't start with a bang, it started with a whisper. On January 31st, 2020, a well-known investment firm, Muddy Waters, tweeted a link. It went to a shocking 89-page report from a totally anonymous source, and it asked a simple but terrifying question. What if this whole amazing success story was just a big fake? And this report, wow, it was incredibly detailed. It basically accused Luckin of massive systemic fraud. The anonymous authors said they hired almost 1,500 people to secretly record over 11,000 hours of video from their stores, all to prove that Luckin was just making up its sales numbers, inflating them by as much as 88%. Now, Luckin's response, it was immediate, and it was aggressive. They put out a statement that categorically denied everything. They called the report misleading and malicious. And you know what? For a little while, it actually worked. The market seemed to buy it, and after a little dip, the stock actually bounced back. But that quiet period, it was never going to last. That whisper on Wall Street was about to turn into a deafening roar. The moment of truth was right around the corner. It all started with a move that seemed pretty routine. On March 27th, Luckin added 2 new independent directors to its board. What nobody knew was that just 5 days later, on April 2nd, the company would release a statement that would absolutely shake the financial world. Their own internal investigation had found something. And what it found was the worst-case scenario. The company admitted that its own chief operating officer, Jian Liu, and a few other employees had been faking sales. And not just by a little bit. They had invented transactions worth a jaw-dropping $310 million US. The anonymous report, it had been right all along. The market's reaction was instant, and it was absolutely brutal. On April 1st, the stock was trading around $26 a share. The very next day, after the news broke, it just fell off a cliff. It plunged 76% in a single day before they halted trading. Billions of dollars in value just gone. And the fallout came fast. The CEO and the COO both fired. Trading in the stock halted. And by the end of June, the company was officially kicked off the Nasdaq. It was a complete and total humiliation. Now, for most companies, this is where the story ends, right? Delisted, disgraced, a total pariah. But this is where the Luckin Coffee story takes another unbelievable turn. Instead of just folding, the company filed for bankruptcy protection. They brought in new management, they cleaned house, and they started the long, painful process of rebuilding. They settled with U.S. regulators for a $180 million fine, they restructured all their debt, and just about 2 years after the scandal broke, they came out of bankruptcy. Ready for Act 2? And what's so amazing is that experts realized that underneath all the fraud, there was actually a really solid business. Like Sean Rain from the China Market Research Group said the company had great technology and pretty decent coffee at a good price. The core idea was actually strong, even if the people running it had been criminals. So where are they today? Well, the resurrected Luckin Coffee isn't just surviving, it's absolutely thriving. The company is bigger and more dominant now than it ever was, even at its fraudulent peak. And once again, it's starting to look outside of China. I mean, the numbers today are just staggering. They now have over 29,000 stores. That's about 3 Luckin locations for every one Starbucks in China. They're also expanding internationally again, opening shops in Singapore, and ironically, they even planted a flag right in New York City, just a short walk from Wall Street. And that right there brings us to the final huge question. The company has made it clear they want to get back on a US stock market. So after one of the most famous frauds of the 21st century, after betraying investors all over the world, can a reborn Luckin Coffee actually convince Wall Street to trust them a second time? Well, that is the multi-billion-dollar question.